What is EPS? That's what we're going to be talking about today on the channel. You are welcome back to the channel. You are talking to the Stock Brother. I am Jeremy, and this is the Stock Brother channel. Today, we're going to be getting back into the What Is series. Again, this is a series of short videos that I put together so you can get to the information that you're trying to get to without having to sift through a bunch of different timestamps and videos and trying to figure out what information you need. You can kind of come back to the series, to this What Is series, and find whatever information you're looking for. So that's kind of why I put that together. You all, again, I'm Jeremy. Thank you for coming back and listening here today. You all smash the like button, hit the subscribe button to the channel if you like the content. I appreciate every one of my subscribers, what you all are doing to help me and to help the channel. So let's get into this. What is EPS? EPS is going to stand for earnings per share. Now, you might see a lot of, if you've ever watched CNBC or any of the stock news channels at all, you will see that there's a couple different things that the stock market itself uses in order to determine whether a company is doing good or whether they're doing bad. And these couple things, one of them, you've probably heard it if you have been on CNBC or watched any news channels in regards to earnings of a company. One of them that they talk about is going to be revenue. Revenue, we will get into revenue in another video here, so you all be looking for the What Is video when it comes to revenue. We'll get that out to you soon. The other part of when it comes to these earnings is the EPS. And again, that's what we're talking about today, the EPS. Again, that EPS is going to be your earnings per share. And when you hear these analysts say, oh, this company had a double beat, or they beat on revenue but didn't beat on earnings, or they beat on, and that's exactly what they're saying. They beat on revenue or they didn't beat on EPS. They have these analysts that they pay a lot of money to sit and comb through all of the financials and everything that these companies put out. And these analysts there on Wall Street, they decide how much revenue the company should get this quarter, or how much EPS or earnings per share that the company should get this quarter, in order to gauge whether that company is doing better or doing worse. It is very important for you as well when you talk about the EPS and whether a company that you own hit their EPS, because of the fact that it gives you an idea of what the management team is doing for the shareholders. So the higher the EPS, the better you are. Again, the EPS is going to be earnings per share. You want to see that your company created more earnings per share than the analysts on Wall Street thought they would. And most of the time when you talk about EPS, if they do beat on revenues and on EPS, when you talk about that company, the stock normally goes up. So when it comes to owning the stock before earnings, really we're long-term investors here, so we want to own the stock way before earnings and just ride it out. So that's kind of the way that we go about it. But a lot of the times, if your company gets a beat on revenue and gets a beat on EPS, then the stock most of the time will go upwards. Now, when you talk about calculating EPS, hope you all got your pens together. I'm gonna give you an equation. You see, I kind of give equations out because this makes it a lot easier when you talk about these different multiples or these different metrics that are used in order to figure out what a company is doing. When you talk about PE ratios, PS ratios, PB ratios, different things like that, EPS, all of these things require some equations to try to figure out exactly what they are. They're pretty simple, but equation nonetheless. So the way you figure out what EPS is, or what the EPS is for a company, you're going to take the company's net income and you are going to divide it by the total outstanding shares of the company. So that's how you're going to figure out exactly what the earnings per share is for this particular quarter. So you take a look at the estimates that the analysts have there, and you just hope that your company can beat those estimates. You always want them to beat these estimates. Now, if they don't beat these estimates, it is not the end of the world. It just basically is what Wall Street gauges on how a company is doing. So it doesn't mean that it's a bad company because they didn't necessarily beat earnings this quarter. You have to kind of take a look at the last year and see how many times they've beat earnings in the last year. That's a better gauge of whether this company always fall short or whether they meet or exceed expectations on a quarterly basis. So that is EPS in a nutshell. It's going to be your earnings per share, and you find out what that is based off of taking the net income and dividing it by the total amount of shares. A lot of times when you look at the metrics of the company, they will give you those estimates and they will tell you whether the company hit those estimates or whether they didn't. They'll give you the estimated or the analyst expectations, and they will give you the company's actual EPS or earnings per share. And you always want that to be better than what they estimated because, again, the stock goes up. So that kind of gives you an idea of what is EPS, what is earnings per share. And that's going to help us in some of these other metrics when you talk about valuing companies as well. So you all keep that in mind. You all kind of log that in. Keep this video here, archive this video if you would need to come back and figure out exactly what EPS is. It'll always be here. And I want to thank you all for coming in. Don't forget, I know a lot of people forget. I do it a lot when I watch YouTube videos as well. Don't forget to smash the like button. Don't forget to subscribe to the channel if you like the content. I also have some links down in the description that you can use to start your own stock market journey. There's some different platforms, Robinhood, Webull, M1 Finance. Use the links down there. Take advantage of those links down there to get started. They will give you all a couple of free stocks once you open up the account and fund the account, or they'll give you a couple dollars as well. You just kind of have to look at those different platforms, decide which one you want to go with, and use the links. All right. Thank you all for coming in. Y'all be sure and come back for the next video. Thank you very much.